Yo guys, welcome back to my YouTube channel, or welcome if you've never been here before. So today I've just jumped on to do my weekly Forex forecast, and this will be for the week commencing the 25th of April and ending on the 29th of April. So just before I do get started with the actual forecast, I will just draw your guys' attention to the written version of this forecast, and the written version will be linked in the description for you guys to reference. Also guys, if you are grateful for this video, then please do subscribe to the channel because it helps me out quite a bit. Alright, so let's get started with the forecast. So, starting with Nzdusd. So, last week I was looking at potential buys coming out of here, but that's obviously not happened. What we had was that small reaction, and then we've broken structure. Sorry, we've actually broken structure the first time, and then we've broken structure here as well. So, what we basically had is the most recent structural break on the daily has come from this high here. So we know we're bearish because we broke bearish, and then we've got this high here, which is basically the invalidation point for sells. So in terms of this week coming now, we know that we're in a bearish bias because we've had the two breaks of structure. So now it's just a case of looking where do we look to sell from to continue this bearish bias. So for me, I can basically see price going two ways. So we can have the continuation using this daily order block up here. So that's where price will retrace up into this area here, and then it'll sell off away from there to hopefully end up taking out liquidity below this low. Or alternatively, it may not retrace all the way back up into here, and we may just continue to see this aggressive momentum coming into the market, and that's why I've got this lower time frame structure also marked out. So NZDUSD this week, the first thing on the daily, we can look for sells out of this area here. And then what I've also got marked out is this here on the 1 hour. So on the 1 hour, the most recent break of structure is here. So that's our break of structure. And then what we've got is this order block here is what caused the break of structure. So for me right now, this is the first reference point that the institution does push price from. So starting the week off, we can look at the 1 hour and we can try and sell out of here on Monday or on Tuesday. And yeah, for me, this will be the first opportunity that I'm interested in next week on NZD. And then if this does break, I'm still 100% on the bearish bias, but I will just be expecting price to retrace, maybe retrace up into this area here, take out this imbalance, and then we can continue down away from the daily. So that's the NZD this week. We're either following the 1 hour away from here for sells, or we're following the daily away from this whole area here, and then we can look for sells on the lower time frame. Either way, very bearish price action, and we've got pretty clear structural leg here for us to trade within. So hopefully we can continue the sells next week on NZD. So AUD. Now AUD is a little bit more complicated than NZD in fairness. So let's just look at what happened previous. So like I spoke about the last few weeks, we were in this bearish bias, and within that bearish bias, we've got this order block here. So this order block is your bullish order flow invalidation order block, and that is still very, very valid and is still an area of institutional demand. Now, with that said, what we've got since then is we've had break structure 1 and now we've had break structure 2. You'll also notice that this price action pretty much mirrors the NZD price action. So, I mean, from my perspective, what's most likely is that in terms of this bearishness here, whatever outcome happens on the NZD will also be happening on AUD because they're just so similar in nature. So for me, based on everything, I am a bigger fan of the overall bearish thesis on the AUD. So what I'm expecting this week going on AU, initially I'd anticipate that we will come down into this area here, and then since that is a valid institutional demand zone and it's protected by this order flow invalidation, I'll expect some type of reaction which is bullish. So when we do get in here, we will see most likely them institutional buyers coming in, and then that will act as a catalyst, which will cause this 200 pip move back up into this daily OB here. And then once we do get into this area here, we will just be continuing down. and I do anticipate that we're going to end up breaking all of these structures here to take out the liquidity, like I said, on Nzdusd. So whilst this is a valid order block for buyers and we could see price continue, for me, just because of the momentum and the impulsive nature within these candles here, the sell thesis is a lot more likely. And also, you know, we basically got it set up so that they can come in here, they can then move price upwards relatively cheaply because they've already got all their orders down here, and then they've set it up perfectly for price to just retrace into this order block and then continue down to break the structure and take out all the traders who are still looking at this bullish situation. So that's AUD for me. I will be trading mainly based off the daily this week in terms of the POIs that I'm looking at. If at the start of a week we can look at that bullish move, because you know there is like 200 pips there, so there's nothing wrong with taking a bullish move early in the week. But I think the move for this week is going to be the sells coming out of this one here, and I do think that that's what's going to be the cleanest this week. So let's see what we get on AUD. All right, so pound dollar. Very clear this week. Now, last week I was talking about how we may see that bullish move come in. Now, we didn't actually see that. What we saw was a break of structure, the first break of structure, which closed on the 19th of April. And then following that, later in the week, what we've had is the second break of structure, which has left behind this candle here, which is absolute clear order block with clear imbalance below. So what we've had now is two consecutive bearish breaks. We've got a mitigation from this order block mitigating this one, and then we've got this order block here causing this new break of structure with imbalance. So for me, this is a very high confluence order block. What I'll be looking for, and this is all I'm really interested in going into next week on GU, is price will retrace up into here, and then we can look for that lower time frame structural transition, and we can look to enter to follow this bearish trend. And you know, for a while, guys, really, since we've hit this order block up here, we have just been moving bearishly on the pound dollar. So it's anyone's guess, really, where it is going to go. I mean, you know, the long-term targets we could be reaching into new lows for pound dollar. So definitely, guys, this week looking for sells, and I'm very, very happy to be following this daily structure for sells away from this order block. So that is the pound dollar this week. All right, so euro dollar. So, you know, I spoke about all this stuff in the last few weeks. This week, I'm just going to focus on what's going on down here. So what we had this week just gone, we had a bearish break of structure. That happened here. That originated from this candle here, which body closed above the previous candle. So for me, that's our strong high. And then we've got our weak low down here, which we are expecting to break. So for me, midweek last week, I was looking at price coming back up towards this strong high, and then we'll see some type of rejection off it, and then we can see it break the week low. Now, looking at what has actually happened on EU, it's literally come up to the strong high, which I've marked, and the order block for it is actually within that wick there. So price has come up, tapped into that wick, liquidity grab just above it, and then institutions have just started selling away from that area. So, you know, they've broken structure, they've mitigated the orders that they generated liquidity with, and now they're continuing lower. So on the 1H, what we've got is break structure 1 there, break structure 2. So we've had that 1H structural transition into bearishness, and that's coming away from the daily order block, and we're also in this overall daily bias for sells. So very, very bearish situation on euro dollar. Now we've got this opportunity to continue with 1 hour order flow, because we've had break structure, mitigation with this wick here, and then another break of structure which clearly originated from this wick here. So yeah, for me this week, and I won't do it personally because I do like to enter with a smaller stop on the minutes time frames generally, but I'd even be happy with this trade as a limit order, because I do think that we are just going to see price trickle up into here, and then we will just see that institutional sell volume start pushing it down through there to then break this daily low, and hopefully we can continue for a longer time frame, a longer term bearish trend. but we will have to reevaluate obviously what happens with the daily structure once we do break that daily low. But the start of a week and early in the week next week, it's literally for me a case of we are going to retrace into this wick and then we're going to sell off to break the daily structure. So let's see if that actually happens. But either way, I'm definitely bearish on euro dollar this week following the daily break of structure that happened last week. So euro pound. So euro pound, it's actually probably one of the more complicated pairs at the minute. So let's just start from the weekly though. So from the weekly, we've got this break of structure. So we've got our bearish bias from the weekly, and we've got our strong high there and our weak low there. Now we can see in this wick here, we've essentially rejected the strong high. So any orders that the institutions had up here have now been mitigated. So at this point, it's pretty much fair game for them to continue now to move price from this area up here towards this weak low to then break the weak low. So for me, I am anticipating that bearish bias based on that wick rejection, and I do think that the institutions are looking to push price downwards to break this weak low. Now, looking at the daily time frame, so since we did get back up there, what we've now seen is 2 consecutive bearish breaks. So we know that we've seen that transition into bearishness on the daily. So now it's just a case of looking where to sell from. So, you know, for me, last week I was thinking that we were going to go out of this candle here. Now, obviously that's been violated, so we do have now a bullish breaker structure as well. But for me, given the weekly and given the fact that the last time we had 2 consecutive breaks, it was bearish, we're still very much in a downtrend and very much in a bearish situation on EG. So for me, there's 2 areas to sell from. Now, you have got this area up here, which is technically where, you know, the original supply that mitigated came from. However, it's so far away in the range, and for me, what we can see is this candle here, which clearly has institutional volume in it. Now, what I think is going to happen is the start of next week, they are just going to start moving away from this candle here, and then that will take us down to eventually break that weekly weak low. So for me, what I'm expecting on EG this week, we can at the start of a week just start looking really, since we've already tapped into this area, for that 5-minute, 15-minute, 30-minute structural transition into sells, and then we can just take that structural transition following away from there. So that's EG this week really. I think we've basically got 2 areas to sell from. We've got the area that we're in now, which is that candle, and then if we do break that, this area up here is still valid, so I will look for sells out of there also if that happens. But like I said, I do think this one is the more likely one on this specific occasion. Now, I will just mention also on the 4-hour, and it's also the daily bullish order block, we have got this area here. So we, you know, within this whole idea that price is now going bullish, which is only really evidenced by, you know, this bit of price action here, which is 1 week's pretty much just over a week's worth of price action. But within that whole bullish thesis, what I would expect is now for price to retrace there and then continue even higher. So if you guys do think it's going bullish, then it's absolutely fine to take buys out of this area there. So I am still open-minded to that, and if I see it super clear, I may be taking buys out of there. But for me, honestly, I do think that we are just going to be seeing those sales come through to fulfill the objectives of the institutions on the weekly time frame and on the daily time frame. So guys, that's EG this week. Basically looking for sells overall out of here. But then if we do get here and start to see that bullish rejection coming in, then you can enter buys. That's absolutely fine because we don't know what's going to happen. But that is EG, guys. So let's move on now to the final pair, pound yen. Alright, so let's start with the daily pound yen. So we've had a break structure 1, break structure 2. So we know that on the daily we're in a bullish bias. Now, within this whole bullish situation, price still has reason. It does have reason to come all the way back down here. It also has reason to come back down here. Now, let's be fair, I don't think it's going to come back down here anytime soon because that's like over 1,000 pips. So for now, I'm just going to focus on what's going on up here. So based on this whole range, I would anticipate that at some point we're going to see price coming down deeper into this range to then mitigate So based on that, on the daily, I think that if we do get down here, we can definitely be looking for buys following the 15-minute, following the 1 hour, and that will be absolutely fine. So if you can get in that, then that could be a great move because, you know, obviously from here to here, 850 pips. So if we can get in that swing trade, then that'll be fantastic. But in fairness, I doubt that'll happen this week because of how many days in the week and how many candles it took us to get up there. But what we could be seeing is that we have now seen this sort of bearish transition, and we'll now transition into that bearish order flow, which will bring us back down to then eventually hit this order block. So for me, just based on the candle, that's what I'm seeing. You know, we've basically looking to now switch into bearishness to take us down here, and then when we do get down here, we can see what happens. Also, we've got to remember that the pound dollar is very bearish. So with the amount of bearishness that's just hit pound dollar, reversing pound yen as well at this point does make sense in my mind. So on the daily, we're looking at a retracement before we continue higher. Now, on the 4 hour, we are still actually bullish. So this is what we've also got to consider, that on the 4 hour, we've actually got this order block here, and that order block is a valid order block for buys. So if you guys wanted to, then you can enter for buys away from here, and I think that that is absolutely fine. That said, however, like I said, and looking at the daily candle formations, I do think that it's quite a high probability that this overall sell situation has now started to bring us deeper into this whole range. So just looking at the 1 hour, what we've had is break structure 1, and now we've got a break structure 2 and a mitigation. So, you know, really, this whole bearish situation on the 1 hour came from up here. So, you know, anywhere up to this point here, I do still think that the pound yen can sell off from to then continue lower. And that's really what I'm going to be looking at this week. So I will keep an open mind to what could happen in terms of the bullish situation because we are in a bullish uptrend. But based on what I'm seeing, I'm more interested now in the 1 hour. And what I'll be doing is if we do violate this high, then I will be looking for sells out of here. But if we don't violate this high, then I will just look to follow on with bearish order flow on the 1 hour to then break the structure and take us lower. So for me, really what I'm looking at this week is sells out of here on pound yen and then sells out of here on pound yen. So let's see what happens. That's pound yen. And, you know, like I say, I do think that at some point we're going to have to retrace to these lower order blocks from a daily time frame. And at this point, we have seen, you know, that more bearishness coming into the market than we've seen in this whole leg. So to me, that shows change of character, it shows a shift of market structure, and it does show a transition to bearish price action. But let's see what happens this week, guys, and that is pound yen. So, guys, if you guys aren't clear on anything that I spoke about, then do check out the written version of this description. The written version of this forecast in the description. And also, guys, if you're grateful, then please do subscribe to the channel because I'll be super grateful for that. So, guys, thank you very much for watching. I hope you guys all have a safe trading week and stick to your trading plans. Cheers, guys. Have a good week.